Being broke is never an excuse to not be investing. Many wealthy people built their entire empires and made their wealth starting from literally zero. Yes, this strategy still works today, and you can do the same. The question is, how would someone achieve that today with the current environment we're in and the tools that we have available to us all? Starting your investment journey now is critical. You do not have time to waste, and you can't afford to wait until you have whatever amount of money that you think is needed to get started. If you sit and wait for the perfect time, that time may never come. Right now is the time that you need to get started in your investment journey, and today we're going to talk about how to get started using unexpected strategies for achieving infinite returns in your investing journey, as well as starting with $0 on the outset. Also, be sure to wait till the end of the video where I give my personal favorite strategy and then give you a resource to increase how much cash you can count on monthly to add to your investing goals. All right, the first strategy we're going to go over today is using your employer's sponsored 401k plan. If you work for a company that offers a 401k retirement account, you must take advantage of this opportunity with your company. If you don't, you are letting money go down the drain every single day. Here are some of the basics of how the employer 401k works and some strategies at each step. The first step is that your employer offers you the chance to enroll in the program and that they even have that available. Sometimes you need to wait a little bit after joining the company if you're new, but also these days many companies don't even have a waiting period with how the current market is. Okay, so now that you're enrolled in the company's 401k program, the next step is to divert a percentage of your gross income into the account using pre-tax dollars. What that means is that you have already made that money. That is exactly right. Usually if you earn, let's say, $1,000, you get to take home less than that because then you have to go pay your taxes on that. But on the other hand, if you send that $1,000 to your 401k, you won't pay taxes on that. So you just earned a return between, let's say, 10 and 30%, depending on your tax rate, just by doing that first step. That is amazing, right? You are a genius just for completing that step. But just wait, there's more. Next, the company matches part of that contribution you made. Look at you, making money again. Let's circle back to that $1,000. If your company matches your contribution at, let's say, a 50% rate, then they will immediately add $500 to your $1,000 that you invested. Again, with no taxes coming out on the initial investment either. So in this example, you're saving 10 to 30% in taxes initially, and then making an instant additional 50% return with the company matching your investment. This isn't even taking into account market returns. So if you invest in something like, let's say, the stock market or the Saint Income Fund is a good example, both returns are around the 8% range. Then in this particular example, you could be making almost 90% on your initial invested dollars on the first year. This is insane when you understand all the benefits and all the different ways that you're making money at one time. Even more, if you look into some real estate fund options or some real estate investment options, many will pay in the range of 15 to 18%. So with all those returns added up, you could be approaching 100% return on investment in your first year with those first investment dollars. And what's more is you could be doing this for every single year. Guys, this is a massive opportunity for you to be growing massive wealth. If you keep up 100% returns in your initial investments, your 401k can grow extremely quickly for you. The next step is taking that amount and finding good real estate opportunities that you can invest in ongoingly. This can be the option of investing in funds, or you can even buy your own property in your 401k. As you know, I am the biggest fan of real estate because of the different benefits that it offers from top to bottom, including cash flow, appreciation, and even tax benefits. It's very hard to find an investment that covers all three. So this is why I'm always saying that the highest level of investing is always going to be real estate in my book. The big picture goal here is to invest into more properties, more assets, and more funds so that you're replacing your monthly income instead with cash flow from your investments, and also getting those long-term asset ownership benefits that only the owner holding those can benefit from. Overall, the 401k strategy is a really big benefit early on in your investing career if you take advantage of it and you strategize into the future knowing your game plan. The next strategy that you can use to maximize and find infinite returns is investing borrowed money. Borrowing money to invest is inherently much more risky of an investment strategy. But it is important to understand that this avenue does exist, and it is here because borrowing and raising money is one of the highest levels of investment leverage. Leverage obviously can also create risk. In this example, if it goes well, it can be an amazing option for you. But if it goes poorly, you might lose people money, you can get into some really big investment problems, and if you have a loan, you might have this on your back for a long time that you're gonna have to pay off in the future. Because of all these risks, you got to be careful here, because if you do it wrong, you can create a problem for many years to come. But let's talk about borrowing money with the understanding that this should only be done in extremely conservative circumstances where the assets you're investing in are very secure and consistent. The benefit is that if you can get access to some capital, you can start investing now. The first example of this is using borrowed money on a down payment of a property. In this strategy, you essentially repay that loan that you're taking to purchase the property with the income that you're receiving from that property. If you're familiar with real estate, there's nothing new here. This is the standard real estate investment model. But what about the down payment? That's a whole different consideration, right? So what do you do about that? Well, option one is what we already mentioned, aka raising and or borrowing money, typically from family and friends. But you know what the reality is? That can be dicey, and it can carry the added burden of splitting the profits on the back end of the deal with those other individuals. So here's another option. One option you could do is use the assets you have to get a loan and then reinvest that money. Suppose you already have a home that you bought a few years ago and it's something that you live in currently. If the value of your home has increased in recent years, you may be able to borrow part of that increase, aka the equity in the house, to use as a down payment on that second investment property that you want to buy. In the case that that option doesn't work for you, there is another big option that you can consider at this stage. And that is more of the joining forces option, aka you can get a partner that you can bring on and maybe they can help with the down payment, or part of their responsibilities will be the down payment of that property. Or a similar additional option is to invest with others that are already finding a ton of success in real estate investing. This essentially completely eliminates the down payment issues that you might run into, and it gives you a lot more certainty in a deal that you might be looking at or deals that they've already sourced. Buying a portion of a higher priced and larger investment may be wiser than buying 100% of a lesser investment all to yourself. You can also bring outside capital partners in as joint ventures on certain deals you're looking at, assuming it's a good opportunity. The good news is that whether it's a good opportunity or not, you're going to learn something in the investment world. If it's a bad deal, you're going to hear from those potential joint venture partners. They're going to let you know that that deal sucks, and they're most likely going to tell you why. But if it's a good deal, you're going to learn why again, but also how to manage it because they want you to succeed. This is essentially what Saint does every single day. Personally, I got my start working for high net worth real estate investors, but I did that for free, and I learned the ropes from there. While it was many years of me being super broke and eating protein shakes and Chipotle because I literally could not afford anything else, I was relentless in presenting deals to those investors and then getting the feedback from those deals. This allowed me to get a ton of no's very quickly until one day something crazy happened. I got a yes. And that deal that I got a yes on from those investors was a massive success. And that's because we built on the foundation of all those no's. I learned what wasn't attractive. I learned what I needed to improve on. And I learned and improved my acquisitions process. So by the time we did do a deal, the deal went super well and the returns were super juicy. Since then, we've been able to do deal after deal with our investors and partners, building our team, building our investment strategies out, and most importantly today, building out our investors we can work with on an ongoing basis. And throughout that process, it was us investing with other people's money, even though we invest full time at Saint. And an important note here is that part of my process of learning was investing with other people, meaning my money that I made from deals, I was giving to other people and other investors and other funds to invest with them. Yes, you are hearing that right. Even though we invest full time at Saint, I am still a huge investor into other people's funds. Oftentimes those are direct competitors of ours. Now, on one hand, this allows me to achieve a little bit of diversification, but most importantly, what it does is it always allows me and our team to see what other investment funds are doing and to pull the best practices and examples that we can to then incorporate into Saint. We essentially are in a permanent loop of improvement. We are always looking to make things better for our team, for our investors, and for our returns. So because that investing with other people in the real estate space, just as investors, is very, very beneficial for us to give the best for our investors later. And as a side note, that's why I can be very confident in what we're doing, because I know what the other people are doing. And the next strategy, which I also believe is the ultimate investing strategy, and that is investing with money that you made from investing. The reality of investing is that investing correctly is an infinite returns game. Guys, that's literally the point of investing, is to get to a point where your returns on your investments continue to earn returns on those initial returns. That might sound like a mouthful, but think of it like a snowball. You make your initial investment, and then that throws off a little bit of cash flow, and then you reinvest that cash flow. That snowball keeps growing and growing and growing until you literally have enough cash flow that covers your life on a regular basis more than even your income does. This virtuous snowball building cycle is what takes a smart person from being financially savvy and conservative to being extremely financially free. The famous saying attributed to Einstein is that compound interest is the eighth wonder of the world. This infinite return strategy is the concept of your money working for you rather than you working for your money. The opposite of this is when someone doesn't pay their credit card and the debt piles up rapidly. Right? We all know that example. The goal here is to achieve the opposite, is to pile on your investments so that you're using your money as an ultimate tool for leverage, where you are achieving essentially an upward spiral of progress that provides more returns on your money than the efforts that you're putting into any single investment. While that may take some time up front for you to evaluate the investment and make sure it's a good opportunity, the ideal amount of time that you'll spend after the fact is significantly less. But your money's still invested and you're still making money on that investment. So that's where the leverage kicks in. For that upfront cost of your initial investment and your due diligence on that investment, your efforts can be paying you on a regular basis. Mismanaging your money is the #1 negative long-term effect on all aspects of your entire life in the United States today. Breaking the money mismanagement cycle with an amazing tool that we like to call the 50-30-20 rule.